there's a lot of confluence here. Okay. I know some of you, you guys have enough experience to recognize these types of situations where you have a pivot low right here. This is a protected low. You could see how price came down and this was protected the way it wicked back up. Price kept trying to push down, but then it found really strong support right here. This is now a protected low. When these candles came back down here, you could see that support held right here to the left, that held. Then you combine that with, we got manipulation lines right there off of the software. This red line is saying that's also a protected low with lots of analysis. And then you have a strong bullish candle pushing off of that with a sweep of the previous 1 minute candle low. So I know that might be beyond some of your guys' current levels of awareness of analysis, but this is a really good setup to where I went exactly 1 to 2 on this setup, right? This was a really nice trade. And again, it's crazy because we're using the 1 minute now. It is so fast, right? And at this time, when all of this was happening, the current 4-hour momentum was bullish as well. So you have that also in your favor. That's one of the trades I took. And then I also took this trade on gold right here. At this time, the 4-hour momentum was actually showing red. And I took this sell right off of these manipulation lines. And this one was just a super quick 1 to 2. I showed this trade for those of you that are not in our Discord. I showed this trade in our Discord. It looked something like this. It was like I got in right on that candle close right there with a soft stop right here just above, and then took that to also 1 to 2 risk to reward, which was about like right there. It was quick. I mean, this was like a 6 or 7 minute trade. Okay. That continued to go down. I didn't trail. I just hard closed it right there for a 1 to 2. And, you could see that had another push over the next 15, 20 minutes. It pushed down, right? For really nice. All right. So we just released what I would call the final version of our software, meaning at this point, we're looking at 2 major components of rules for trading. Okay. We look at 2 things. Number 1, we look at structure. And then number 2, we look at manipulation. Okay. Structure and manipulation. Right. So that's how all of our trades are based. They're all based on structure and manipulation. Now, both of those things, structure and manipulation, those are all derivatives or byproducts of liquidity. Okay, now I'm going to start showing you some secret sauce, right? Even though it's a public call, right? This is secret sauce. This is stuff. This is gold right here, what I'm going to show you. My goal is to open your eyes and make you go, wow, I see, said the blind man, right? Because there's a way of looking at the charts that gives you clarity. There's a way to look at the charts that gives you understanding and confidence, where you see the same thing playing out over and over again. You could start basing your trading decisions on those things that you're seeing, right? That's why you guys are on this call, okay? Now, again, structure is very important because we know that the market moves from level to level. And then we also know that manipulation is important. We call it manipulation when it's really just seeking liquidity, right? Retail traders say, oh, I got faked out. Oh, this was manipulation. The most simple way to define manipulation is basically when it looks kind of like price is supposed to go in a certain direction, and then it does start moving in that direction, but then quickly reverses and goes in the other direction, right? That's manipulation. You don't always have to be tricked or faked out by manipulation. Okay, you could watch for manipulation, and then you could trade with the manipulation to where you're using that in your favor, right? All that really is the market seeking liquidity. The market cannot move if there are no orders being filled. So when you see candles moving and reversing and manipulation happening, that's because those are the areas where those orders were. So the candles are like our evidence, right? The candles are the fingerprints that are left behind showing the evidence of where the orders were, and it's incomplete, right? I've already taught on this on other calls. The candles and wicks are a very incomplete picture of what's really happening in the market. And I know some of you on the call, maybe you guys trade like depth of market and volume profile and order flow and tick data and all that. Even those things are still incomplete, right? There's no one thing that's going to show you everything in the market. And that's because there's too many players in the market. There's too many things happening all at once for you to be able to see everything, right? So that's where you just have to make a decision. You say, okay, what can I see and how do I use that to my advantage, right? So we see candles, we could see structure, and then we can measure manipulation. Right now, the AiO does a damn good job at showing you levels of manipulation. Okay, so what's really cool here is you could see there was a manipulation line right here on gold, right? We took our trades earlier this morning and then price found support and then came up and came back down to find more liquidity before finding more support, right? Gold has been on a completely bullish tear. I'm going to switch over real quick to our other indicator that we have within our community, right? So this right here is called the AiO. It's an exclusive indicator for our community. They also get access to this one here called the liquidity targets. And liquidity targets is a higher time frame. Let's see here. There we go. There's a higher time frame analysis also on the 4-hour. And you can see that gold is very far away from any recent key levels, right? It's way up into all-time high. Now, eventually, this is going to lose momentum. This could even lose momentum today and start to reverse because the people that are moving the price up to these levels, they're not idiots, right? You don't just keep buying, right? It's like if you're going to go buy a home and you're placing a bid on a home and you're like, okay, I'll pay 600,000, and then it goes to 700,000 and everyone's fighting for it. You might still pay 700,000, but if it jumps up to 1.2 million, you might start thinking about it. You might say, I don't know. I don't know if I'm willing to take a bath like that. If it goes to 1.8 million, now you're like, yeah, I don't think I'm going to jump in for that price, right? I'm not going to be the sucker holding the bag. If it goes to 2 million, you're like, okay, now whoever's still buying this is an absolute fool, right? So that's how smart money, right? Smart money. That's how they play with their money in the markets, right? They know when to buy. Oftentimes, smart money likes to buy assets when retail traders think that it's already overextended and it's already way crazy bullish, right? You ever seen that where you're like, it cannot possibly go any higher, and it's just screaming and you're like, who the heck is still buying, right? It's because there's a lot of data showing facts that are beyond our opinions, right? We have opinions based on a candlestick. Oh my gosh, this thing already shot way up. It has to come down. Well, is that what the data is suggesting, right? But even the data eventually tells you to stop buying on a bull rally. Eventually, something can be fundamentally overbought, whether it's by data or because of structure, right? So gold has been on an absolute bullish tear. It's been going crazy for all sorts of reasons. It's probably going to continue to go up. It doesn't mean it's not going to have some big pullbacks, right? Gold really likes to come way down and sweep major higher time frame lows before finding continued to support to go up. Okay, so with all that being said, okay, what we're doing here with the AiO is we're looking at the charts and we're saying, okay, for example, this morning we had bearish momentum on the higher time frame, so we took some trades coming down. Very, very nice, right? Nice trades, easy in and outs, easy wins. Now the rule is when price goes to the opposite side of these manipulation zones, if you notice, the manipulation zones are marked by green and red. Okay, so what that means is anything below the red is still considered bearish, and then anything above the green is considered bullish. Now, you can trade in both directions. All that matters is that your trading decision matches with the higher time frame momentum up in the top right corner. Okay, we're pegging this table. It's real simple, right? Green is bullish momentum, red is bearish momentum. we're pegging this table to the momentum of the 4-hour chart. That means, yes, we are trading on the 1 minute so that we can get tight setups, fast scalps in and out. You have like 5 to 10 trading opportunities every single day on NASDAQ and on gold. It works super good for those assets. Very high risk to reward opportunities where you should definitely be profitable. But our trading decisions are aligning with the 4-hour because for the most part, price is always pulling in the direction of the momentum on the 4-hour chart. Are there other time frames that are good? Of course, every time frame is valid, right? The 4-hour is a nice medium balance. It's like kind of in the middle where, we're not looking at the weekly and the daily. That's more for your intraday or swing traders, especially Forex traders. You do need to use, even monthly analysis and daily when you're trading Forex, foreign exchange. But we're trading gold and we're, the CFD version, and we're also trading indices like NASDAQ or futures, right? Those are very impulsive assets that move very, very quickly. So that's why it doesn't matter what's happening really on the weekly, the monthly, because it moves so fast in both directions that there's trading opportunity in both directions. We don't have to say, oh, I'm only going to trade gold with the weekly time frame. You can, but guess what? You're going to lose out on tons of really good, solid trading opportunities because you're stuck on a time frame that's way too high. That's unnecessary. It's unnecessary. It's good, but it's unnecessary, right? And as a trader, you want to be practical and you want to open yourself up for good opportunities. Okay. Now, I could track these manipulation lines. If you traded these manipulation lines and that's all you traded, right? When you get the alerts right to your phone on the manipulation lines, as long as they're in the direction of this momentum table, you'll have a very high win rate. And also there needs to be volume, obviously, right? Like yesterday we were having a discussion in the chat where people were saying, oh my gosh, I'm really struggling. I keep getting stopped out. And it's like, well, it's Martin Luther King. It's a US bank holiday. What do you expect? Like price is going to be very choppy when there's no volume, and it doesn't matter what system you're using, you're going to get stopped out, right? So this was based on this. I mean, look at, kind of funny, right? It was this area right here, right? We were having discussions, and guys, when you start trading, like take responsibility always for yourself. The first thing you need to do is not look at what AiO is saying. No, don't look at an indicator or a software. The first thing you should always do when you open up your charts is use your own two eyeballs that God gave you and look at what price is doing. Okay, so yesterday was a holiday, and when price opened up during Asia, the market went sideways for like 20 hours. Now, all you have to do is just zoom out and look to the left. That's it. It's a really good habit to have always, regardless of what system you use to trade. Zoom out and look to the left. Okay. And if price is doing that, don't even trade. Trading is not a full-time job. Trading is not an everyday, all day long thing. Now, yes, there are seasons of trading where, yeah, you are doing a lot of chart time. Like right now, I have a lot of chart time happening in my life. I have a lot going on because I'm doing a lot with trading. I'm managing different projects right now, and I need a lot of chart time. But if you're just trading for yourself, then you don't need to be sitting here trying to trade 40 hours a week. Okay, 30% of the time, this is what the market looks like. It's consolidating. It's just ranging, right? It's just bar coding, just going up, down, up, down, up, down, right? It's looking for liquidity. There's no volume to move the market, right? And what did we say in our chat? We said, hey, after the holidays over, the market will be anxious to kick into high gear and we'll see some momentum. And then look, sure enough, hello, look at what happened, guys. Super awesome breakouts, right? We came into Tuesday and look at all of these entries. These are all entries on the AiO, and all of these lined up with the momentum table. The momentum table was showing green, and then you could see all of these boom, boom, boom. I mean, just incredible, over and over and over and over again. So even if you find yourself getting chopped up, let's say you didn't know we were in consolidation, and you're like, oh, I got stopped out here, stopped out here, stopped out here. Okay, don't just go and keep going. Like, hold on. If you have like 2 losing trades, stop for a second and say, wait, what's going on? Why is price so choppy? Okay. Protect yourself. All right. When there is volume and momentum, it'll be very obvious. Okay. And then that's when you have to have the guts to take advantage of that and really go for it. Okay. Like this right here, there'd be no reason to question yourself right here. No reason. And the way this software really, really helps you is that it's going to give you confidence when your opinions don't feel confident. Okay. I'm a trader. I built this software for myself, right? I'm opening it up for you. It helps me. So I know that it can help you because it helps me. Because my own opinions, for whatever reason, the damn human mind is wired to always think these little trends are going to quickly come to an end. And trading is always like, no, the trend is your friend. Like when something goes on a trend, it's going to push and push and push and push. And that's when you're supposed to capitalize. How do you do that? By hold on to your trades and capitalize on those moves. That's where the software is going to help you. Okay, if the table's showing green and you're getting bullish manipulation lines and the candles are green and price is running in a straight line, take advantage, baby. Get what's meant to be yours. Okay, if you trade like that, you will be profitable. That it's as simple as that. Okay, take advantage when the opportunities are good and you'll be profitable. All right, that's how any system is going to be profitable. The reason people can have access to a good system and still not be profitable is because they're either over trading when they shouldn't be trading, or they're letting their losers run bigger than what the system says they should be doing, or they're not holding on to their winners long enough because they're scared. It's all scarcity mindset, poor mentality, bad habits, right? It's bad habits. Okay. This system right here is super profitable and the losses are very tiny, very small. Even in a choppy market, even on a 1 minute, it's very small. Okay. Now, this is what gold looked like, right? I already showed the NASDAQ. Now let me show you, I'm gonna show you like how does price move. Price moves with something that I've been teaching for years now. I should coin the phrase, honestly. So don't be a jerk if you're listening. You're like, I'm gonna go coin the phrase before Sal. Hey, I already have proof that I was training on this like 3 years ago. Okay. I call it pocket gaps. That's what I call it. And that's not a term. I've never heard anyone use that phrase. I think other people probably have similar concepts as what I'm going to show you, and they probably just call it something different. Okay, but I call it pocket gaps. Okay, what that means is the market likes to move from pocket to pocket. And a lot of times traders say from level to level, and that is true. Okay, but if you want to get really precise, if you want to get very accurate, then you have to pay attention to the gaps. Okay, the gaps, not fair value gaps. No, not fair value gaps. I'm talking about gaps of pockets. Okay, so watch this. This is where things are going to start really clicking for you. Let me show you this. Check this out. I'm going to use my brush from TradingView. Okay, so we can see price goes up here. Let me change the color of that to yellow. Give me 1 second. All right, there we go. Cool. So price goes up and then price comes down like this, okay? Like that. Now, for me, what that created was a pocket. I always look at this space right here, right where the pocket starts to go wider and it starts to open up. Okay. Now, when price came back and bounced here, if you notice, it didn't go all the way up to that pocket area where like right at that squeeze level where it starts opening up. This pivot high right here didn't go that high. And then this one did not either. Now, I know that price likes to fill the pocket gaps. I know that because I see it every day, all day long. And if you look for this, you'll go, holy crap. Price does this all day, every day, all day, every day. This is all it does, because that's where the continued order flow is existing. That's where liquidity is resting. I'll prove it to you right now. Okay. So if I see these two pivots, I'm going, it still hasn't gone high enough because I needed to fill this gap right here. Look at what it does. It goes up right into that pocket, and then you get a nice sell off. Boom. Right? So that's a huge, huge thing on training your eyes to look at those pockets. And I'm going to give you several more examples right here. It's going to blow your mind if you know what to look for. So imagine I'm waiting for price to come up into this zone right here, and it failed to do it here. It failed to do it here, and it finally does it here. And then the AiO software goes from green back to red. Oh my gosh. What do you think I'm thinking, guys? What do you think I'm thinking when I'm going, oh, I think price should, let me get rid of some of these lines here. It starts to get kind of dirty. Whoops, we don't want that. What do you think I'm thinking? Let me know in the chat. If when I'm waiting for price to come up to a specific area, and then it does, and I'm waiting for a sell, and then AIO goes from green back to red. What do you think I'm thinking, guys? I'm thinking jackpot, ding, 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 right? Reversal entry, yeah, for sure. So that's the sell-off right there. And this was the biggest move down compared to this one and this one. And that's not a coincidence, right? Price moved right here from 46.82 down to on that one leg 46.56. Okay, so it moved over $30. Compared to the previous ones, it moved 46.76 down to 46.62. So like $14, right? So more than twice the move on that, right? Now, if you notice, check this out. I'm going to zoom in again. Let's do this some more, okay? So price goes up and creates this pocket. Look at where this rejection occurred, right? Right inside that pocket. And then it comes down and creates a new low, right? Now, what is this? This is called a new pocket right here. Here's the pocket. So look at how price comes down, finds support without reaching that pocket, comes down, finds support without reaching that pocket. So many traders are not paying attention to these things, and they're getting in too early because things are not happening correctly. There's not enough liquidity yet. Wait for a key area to be reached before going with the liquidity move from that area. These little bullish pushes here are nothing. They mean nothing. Okay. Now this one, tell me this push down right here, guys. Tell me in the chat if you're following along with this amazing training. Tell me, why does this one matter? This one right here at the bottom right there, why was that one obviously significant? Can you tell me in the chat? Okay. It finally reached the pocket. Come on now. Yes. That's not a freaking coincidence. Look at where this is at compared to this right here. It really reached that pocket. Now you get that bigger move compared to getting in right here and getting frustrated because it goes against you. Getting in right here, frustrated because it's still choppy. Why is price chopping around? Because it never reached the key area of liquidity, right? And it's kind of laughable. Some people will laugh because it's like, dude, this is the 1 minute chart. What are you talking about? Guys, this works over and over and over and over and over again. Now, check this out. Look at now the next pocket that's created right here, okay? Now you have a pocket right here as well. Look at price comes down. Where does it go? Right to the former pocket. Goes back up. Now where does it go? Right to the former pocket right here. It comes right back down. So I'm looking for bullish entries. Obviously, I would only want to buy right off of a reaction from a bullish pocket. That's where the liquidity is at. That's going to give you the tightest setup. That's going to give you the smallest amount of risk. Why is that such a beautiful entry? Because you know that if price comes below the former pocket, then your pocket was wrong. And that's such a small move that you could just close and take your little tiny loss. right? Imagine doing this with the AIO every day, all day. Guys, you'll freaking kill it. Look at what price does. Look at this. It comes up and creates another pocket right here, another gap, not a fair value gap. There probably is a fair value gap in there, but that's not what this is. I call it a pocket gap because it's a gap within structure. It's bigger than a fair value gap. It's more significant than a fair value gap. It's more reliable than a fair value gap. This is how price moves in the market. Look at how this little test down didn't reach the pocket. So then what does price do? Goes up, comes back down to this pocket, finds bullish reaction. But guess what? We still haven't filled this pocket down here. What does price do? Comes all the way back down to that pocket. Boom. Look at it right there. It came all the way back to pick up the orders in that area. These are magnets for price. They give you confidence. So now when it comes down and then it goes bullish again, you're like, holy crap, it just filled that pocket gap and now it's going back up, right? And look at how price held for so long right there before losing momentum and coming down back to this former level right here, okay? Now look at right here. I'm just going to start lining this up for you guys, all right? I want you to look at the bearish pockets, like look at these, and then look at where price goes to before having a reaction, okay? Now I want you to look at this bullish pocket right here with the green candles, and then look at where price reacted to. Look at these pockets right here, and look at where price was struggling right here. Look at how you have a bearish pocket right here, and you have a bullish pocket right here, and look at how price is bouncing from one pocket to the other side until it needs to find direction. It finally broke above, saying, oh, we're going to break out to the upside. But that's not a coincidence that there's sellers at this bearish pocket and there's buyers down at this bullish pocket. That's all price does. This is the ultimate ping pong, right? So I'm taking this information into analysis when I'm making my decisions. Now look at this. There's a gap right here up at this level right here that this didn't fill this whole time, right? I mark these levels up all the time. And what I would do is when I saw a price come up right here, I would cross-reference that and say, oh, how funny that lines up with this right here. How funny that lines up. What a great selling opportunity because we still haven't engulfed that pocket. That's another pocket gap. Boom, that was a nice sell-off. So then price comes down, right? And then goes up. Now we still have a pocket down here. There's still this little area that hasn't been filled still. Okay. All right. Still right now, it's still not filled. Okay. Now you have some major imbalances now on gold, major. Okay. Now what's happening is if you're paying attention to continued support on gold, here's what you see. Wait for the market to create these pockets and then wait to see the reactions off of these pockets. Okay. Now this is a huge pocket gap right here, huge right there, right? And there's another one right there, another pocket. There's another one right there that's not fully filled because even this bearish push down didn't fill that. Okay, those bearish pushes down filled these ones right here. So once a pocket is filled, you don't have to pay attention to it anymore. So these pocket gaps right here, right? Those already got filled by this right here. So you don't need to pay attention to these. However, there's still some more down here that did not get filled. There's another one right here that did not get filled. Those are magnets for price. So when you're shorting gold, where should you be targeting price to go to? Think about that. If you're in a short and price is already right here again, and you're like, well, this low right here already filled these pocket gaps, and you're shorting gold, where should your targets be? These unfilled pocket gaps. Okay, because eventually they will get filled. Price will even come down all the way to this one and fill that gap. When? We don't know when, right? It's impossible to ever know when, but you know that it will. And when you see price moving in that direction, that's when you have that confidence going, oh, look, that hasn't been filled yet. Okay, so then look, price, what did it do? It came back up, came down, created a bearish pocket, filled that pocket, came down to fill this pocket right here to the left to find continued support up. Okay, so what that means is here's what I do. Now, I feel extremely blessed that I have the software because there's so much more going on that the software does for me. It's showing me, are we in higher time frame momentum? Is it green? Is it red? Where are the manipulation levels happening? Because manipulation zones are protected zones. What's the color of my candles? Are we red or green? It's doing all of that. Okay. All I'm doing beyond that is using my pocket gaps for entries. I want to see a buy off of a bullish pocket gap or a sell off of a bearish pocket gap. And then in terms of, well, where are you targeting? A lot of people ask in the inner circle chat, where's your target for take profit? To the next pocket gap that's not filled. You'll see price will run to the other side of the chart to go fill that other pocket gap. And it does it over and over and over again, over and over again. Okay, so if you just take what I'm showing you today, guys, just I mean, it's not just something because the AIO is $1 million software, but if you combine that with the simple understanding of how price moves with these pocket gaps, you will save yourself tons of headaches and stop wasting time randomly getting in random levels of the chart where there was no new liquidity taken. Liquidity has to be taken in order for the market to move. If you haven't reached an actual pocket gap, then price is not really going to go anywhere from there, from where you're getting in. You want price to move. You want to get in, you want to get out, right? So when people are like, oh, price is choppy, it's like, well, where the hell are you getting in at? Why are you getting in? Chances are liquidity hasn't even been taken and you're just wasting your time and you're frustrating yourself because you don't know what to look for, right? You want to look for areas of resting liquidity. Where is it at? Inside the pocket gaps, right? Where the hell did I come up with this? I don't know. I just see this every day, all day long, every day. This is all I see. Pocket gap to pocket gap to pocket gap to pocket gap. So it's so simple. It's so easy. And then I just use the AIO analysis. And then I go and take a look at the liquidity targets and say, okay, where are my key levels at on the higher time frame? What's going on here? Guys, you combine that. I mean, what else would you ever need in trading? Nothing, ever. It's so simple. Okay. These setups are so incredibly tight that the risk to reward is insane. And this is the last thing I'm going to show you today. Let me get rid of all these brush marks here. Okay. Wow. I made so many. Holy cow. Is it still deleting? Yeah. Oh my gosh. This was a must have been a long trading. I had 500 lines on the chart. Okay. Let's get rid of that. Okay. The last thing, guys, I'm going to show you is the risk to reward on these things. Okay. The risk to reward is very, very high. All right. Let's just go through the last few trades. Okay. And this is like, what if I just took every single trade? Okay. This right here was a bearish manipulation line. Okay. I have another HTF candle indicator that I use. Okay. That shows me a free indicator that shows me the current 4-hour candle right here. You could see, some of you see my screenshots. I have an overlay behind the candles showing me the actual current 4-hour momentum displayed on the chart, right? The table does the exact same thing, but this is a new feature that I built. And so I'm cross-referencing this to the actual 4-hour candle. Okay, so all this is just a 4-hour candle. That's all it is. It's just showing me what's going on. You could see that this is right when the 4-hour candle was turning red. Okay, so that could be a legitimate trade, right? Now, what do you notice with everything I just taught you guys right now? What do you guys notice about this right here? This reversal where price is going up and then it starts to go down. With what I just showed you about pocket gaps, what do you notice? Can you point it out for me in the chat, please? What do you notice about that setup right there in regards as it relates to pocket gaps? What do you notice? Tell me what you notice. Okay, so what am I asking? This is what I'm asking. We got manipulation lines right here. Now, as this relates to the pocket gaps, what do you guys notice right here if we were to consider pocket gaps? Okay, Chris is saying hit previous gap. What gap? Pocket gap was filled at the low, then filled again at the flip. Okay. I'll just give you the answer. Okay, I'll give you the answer. This pocket gap right here, guys, is unfilled. Look at this gap. That's the gap, right? You ever heard of a thigh gap, right? Like I know some women, it's always been the weirdest thing to me. They want a thigh gap. Like they think like that's an aesthetic feature, I guess. I mean, whatever. I'm not a woman, right? So I don't say that in a judgmental way. It's just weird as a man to be like, thigh gap? Is that a thing? Okay. All right. I guess it is. But there's a gap right here. You see that? Look at that. This right here did not fill that. I'm expecting price to come up into this area before making a move. Okay, so this right here is a little bit better for me, this move here, as opposed to this one. This one to me is premature. This one is okay. Now, by this time, watch this, guys. I'm giving you the freaking secret sauce here. This is like master trading, like to make you extremely profitable and deadly on the charts, guys. Seriously. Look at the sequence here. Let me erase this. Okay. I'll tell you how I look at it. I'm just going to tell you how I look at it so that we don't go too slow waiting for people to type in the chat. There's a very clear pocket gap right here that's not filled. These highs right here did not fill that gap. I'm expecting price to get up into this level here. Price did eventually reach it right here. Got it. So now we could have confidence on a sell-off, right? Okay, now let's use AiO. AiO, what did it do? It flipped bullish and gave bullish manipulation lines. These manipulation lines right here are bullish. And the 4-hour momentum turned bullish. That means as you're coming back up, check this out, guys. Here's the ready? Here it goes. All right. Check it out. Here it goes. This high completely filled this pocket gap right here. Okay. There's no more gaps to the left. Look at this pocket was filled by this. It was actually engulfed. This pocket gap was completely filled by this right here. The last pocket gap on the way up is this area right here. That's right where AiO turns bullish, gives you bullish manipulation lines, does a quick impulse down, and then finds support. If we find support here to go up and these pocket gaps were already filled, where does price have to go? Like seriously, where is it going to go? If you're like, well, there's no more pocket gaps up at the top. So where do I trade to? What do I do? There's no more pocket gaps. Then what does that mean? Where is it going to go? Where's it going to go, guys? We're talking about gold here. Where's it going to go? It's going to go back to all-time high. It's going to go back up. Why? Because it already filled all the pocket gaps. That means it already grabbed all of the sell orders that were resting as liquidity inside those gaps. That means all the sellers were already absorbed. That means there's no more sellers. They were all absorbed. This was the last little bit of sellers. That means there's only one direction to go. It's going to break back out to the upside. And then AiO is like, buy, green, 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 boom, boom, boom. It's so clear. It's making it so extremely obvious to you, right? But then let's be real. Today, as these candles were going up, what were you thinking? What were you feeling? You're like, oh, I don't know. This thing's already pretty overbought. I don't know. Yeah, it's all green, but right? The emotions start kicking in and you don't have confidence to buy or to hold, even though price is like, oh, all the sellers were absorbed. Let's go, baby. Right? That's what the market does, right? Because it's all based on data. Okay, so for me, the fact that this pocket gap was filled, this pocket gap was filled, this pocket gap was filled, we came up and found support above this pocket gap area tells me we're going to all-time high. And that's what it did, right? Now, it's really high. Yeah, but so what? Who cares, right? Our moves are so small. Our scalps are so small. You don't need huge movement, right? This is a wonderful risk to reward, guys. Like, I don't expect you guys to trade these exact setups because I think it's damn near impossible, but I do think it's pretty possible to get close. So what this means is when price comes up and closes back above that level there, you have options. The actual setup is that red line right there. This is the part where, like, again, One day you're going to get this, guys, and you're going to be like, oh my God, I'm a billionaire, right? Like this right here is a 1 to 33R. That's the actual setup of AIO. That is the setup. Okay. I'm not making this up. All right. This is the actual setup of the AIO. Look at it's saying once price goes above this green line, price should stay above the red line. That's the setup right there. Now this candle closed above. So if you want to get super realistic, it'd be like this. All right, I'm going in on a buy and I'm putting my stop right there. That's the actual setup of the AIO. If you were actually following the software perfectly, that would be the setup. Okay, now where did that go to? Let's take a look here. Okay, so that means so far the actual setup, if you got in right away, is a 1 to 13R. Now, I'm going to start going over this again and again and again and again, guys, on our calls, because I'm going to get you there. I'm going to get myself there. All right. I built this software to blow people's minds. I didn't build this software to like, oh, it's okay. If someone says, oh, have you tried the AO? Yeah, it's all right. If someone says that, they have no freaking idea what this software is all about. They have no idea. They're clueless. This software is designed to blow your freaking mind. I'm serious. Okay. These are the setups of the software. All right. Now, I know Bobby, if he's on the call, I think he's on the call. I think I saw him. He had a 22R trade. You were showing Bobby. Let me see. Just going through the list here. Is he on the call? Da, 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 da. Sorry, Bobby, if you're on, I can't see you yet. I'm looking through the call list, and it's okay. Yeah, okay, there you are. Bobby had a 22R trade a few days ago. And Bobby, why don't you just write in the chat, how the heck did you get a 22R trade? It's because he used the software, right? He used the actual manipulation lines. That's what he did. And it was a very similar setup. It was a reversal from bearish candles to bullish while the higher time frame momentum table was also bullish. And he traded above and kept the stop loss tight. Now, guys, you should be so excited right now to actually get here. Okay, meaning like, let's get here, guys. Let's get here together. Let's take the setups of the AIO. This right here has peaked out at a 13R. Even if you have a trading plan where you're like, all right, 4R is a lot. Okay, 4 risk to reward is a lot, right? That would be, this is 4R right here. Okay, look, I'm going to show it to you. Right there. That's 4R. Okay, so it hit 4R in 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. In about 20 minutes, it hit 4R. Okay. The AiO software is an insane indicator that could literally do 20, 30R trades all day long with its eyes closed. And that's why even if you have a couple losses, it doesn't even matter if you're trading the actual setups. So what is the setup? The actual setup is the candle closure away from the manipulation lines. Okay, so that's why, let me zoom back in here. This is the actual candle closure. Right here, this bullish candle, that's where you would have already had these lines on your chart. That would have been your trade entry. The stop loss goes to the next red line, right? Because it's saying that price shouldn't go back underneath that. Now, does that take some cojones? Does that take guts? Right? Guys, does that take balls? Yeah. Oh my gosh, it does. Why? Because you don't trust it. I'm looking at your guys' comments in the chat. You're like, yeah, once I trust this thing, I get it. I totally get it. We've made updates to the software and we've been kind of back and forth because I've been trying to develop something to really help you guys. This is it. Okay, this is it. You don't need anything beyond this. This is probably one of the most powerful systems now in the world. That's not hyperbole. All right. So your goal is to practice and trust, practice and trust, practice and trust. Okay. The software is saying that there's a high probability that price is going to stay above the red line right here. Now, can you guys tell me in the chat, did price stay above the red line? After price closed away from that manipulation zone, did price stay above that red line? Let me know in the chat. Yes, it did. It did what it said it would probably do. Okay, if you can lock yourself in to really go for these kinds of trades, yeah, you'll get stopped out sometimes. Yeah, duh, that's trading. You'll get stopped out on any strategy. But if you're actually trading these setups, the winners will be so incredible that they will drown the losses out. Like they will wash the losses away because you'll be like, yeah, I had 3 losing trades in a row. So I lost 3R. And then my next trade went 11R in 19 minutes, whatever. Right? That's the AiO. That's what we built here, guys. Okay, structure, higher time frame analysis, our own revamped, customized rebuild of something similar to like the Heikinashi, combined with liquidity grabs, manipulation zones. Guys, this is super powerful stuff. It's really powerful. Okay, so what is the setup right here? It looks like this. Here's the next setup. Candle closure, red line. That's the setup. Much bigger setup right there. Much bigger setup is going to give you much smaller risk to reward, right? That's you could trade that a 1-to-1 if it's a big setup, and you're like, oh, you know, and it left a pocket gap down here, right? You're like, oh, price might come down into this level right here to fill that pocket gap that hasn't been filled, right? But you could see that even this trade is doing good. Okay, so I'm just going one by one here. We're looking at these trades. Okay, what's the next one? The next one looks like this. Okay, here's the candle closure. And there's the stop. Okay, let me zoom in on that. Let me move this panel out of the way a little bit. Okay, look. This is real data. Your charts have the same things that my charts have. Look, the software is saying when this candle closed right here, this bullish candle, that would have been your entry. Your stop loss would have been right there at the red line. Guys, did price stay above that red line as well? Tell me in the chat. Did price stay above that red line? Yes, it did. Right? So that's your trade, right? Where that one is currently still working out really good, right? So far, what is price reached on that? That's a 1 to 3.9. Okay, it actually peaked out higher, right? It actually went over 1 to 4. Okay, so this trade right here has gone 1 to 4 risk to reward in the last like 20 minutes. Okay, now there's another one right here. Here's the next one. Let's take a look at this one. I mean, guys, how does this not blow you away, right? It blows me away. Here's another 4R setup. Here's your entry. There's your stop loss. Did price stay above that red line? Yes. How far did price go? Up there, 1 to 4. Now it's above 1 to 4 and it's going even higher. Okay, so look at guys. Now watch this. Check this out. This is where, look, again, you're not a machine. I don't expect you to be this fast. I'm just showing you the sauce. Check this out. Here's a candle closure off the manipulation line. Here's the red. Check this out, guys. Like, let's really look at this. This is very powerful. Very, very powerful. Very, very powerful, my friend. My friend, this is so powerful. Blow your mind, my friend. Blow your mind. Check this out. Okay, look at this setup. This is crazy. All right, check it out. So this is the candle closure. The software is saying price should stay above this red line. Now price got up to a 1 to 4.4 right there on this setup. If you got in right away and had your stop at that red line, price got up to a 4.4 before the next candle. It came down and barely wicked that red line right there for that setup. And then it came right back. That's currently running at like a 6 or 7R or whatever this next one is right here. Okay, so just the last few trades. I just wanted to open this up and show you the magic. Just the last few trades, guys. We probably have somewhere over 20R just in the last like hour and a half. There's 20R of profitable opportunity. And look at what gold is doing right now. It's still screaming to the north, and everything on the AiO is saying buy, 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 hold, momentum. You guys see the power? I mean, guys, this is like insane for me. I'm like, I'm blown away. Right now, you're gonna have to deal with spread. You're gonna have to deal with latency and slippage on your entries. A lot of you can't get your entries that tight. Okay. But guess what? You could get your entries when those candles close as tight as you can. You could put your stop loss at those levels that the AIO is saying to put your stops right there. You can do that. So what if you have some spread and it cuts your RR down? Oh, so instead of getting 20R, you only got 12. Oh, you only got 7R. What if you have terrible spread on your broker? I trade on a broker with high spread. Okay, so what is the RR on that? You could still get what? Guys, do you know that like most traders don't even track their RR? Most traders don't even get 2 or 3R in a day. They're not even tracking this stuff. They're not even tracking a proper setup and doing risk to reward and calculating their risk. Right? This is how a professional does it. Now, I'm not going to be a hypocrite. I'm not a hypocrite. I'm still working on this myself, but I needed a foundation that would automate it for me so that all I have to do is plug and play. That's where I'm at. That's where I'm at, and that's where you're at. If you have the AIO, then that's where you're at. You're at a place right now where you now have an automated tool in your hand that's showing you the secret sauce of these incredible setups that have high risk to reward. Now you got to be diligent and calculate your risk and actually take the setups. So I want you guys, all of you guys that are in the inner circle chat, imagine right now that before this call, what was the environment in the chat? Just kind of an average boring day. Okay, oh cool, a couple good trades. Oh, I'm still learning to trust the software. And I'm showing you something that's so mind-bendingly profitable that you could tell people have no idea. No one knows. They don't realize this is how powerful the system is. You could hear it in my voice, right? I get fired up because this is a game changer. That's such a cliche. Everyone says, oh, what a game changer. This is a game changer. Show me the statistics. Show me the setups. Show me a non-repainting software that's creating ridiculous amounts of risk to reward. I've tried millions of systems out there, guys. Nothing is doing what this is doing, and we're just getting started, right? I just put this momentum table on your chart this weekend to make sure that you can be focused in the right direction of the market. I showed you this pocket gap strategy where resting liquidity is. Now you line that up with the AiO. When AiO is red, 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 you should be focused on sells. Take sells from bearish pocket gaps, use risk to reward, and use the setups of the manipulation lines. When the AiO is green, 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 you should be only looking for buys off of bullish pocket gaps, but you should be using the setups from the AiO, the manipulation lines combined with the stop loss levels. There is so much freaking analysis going into these lines. Why would you not use that? Seriously, like let it be automated for you. Let it be easy. Let it be simple. The software is automating this analysis for you guys. Okay. So with that being said, hey, I hope you guys, did you guys enjoy this training? What did some of you have some light bulbs go off? Yeah. Did you guys receive anything? Those of you that have the AiO in your hands, does this give you a little bit more confidence that you got something very powerful, right? You just got to use it, right? A lot of you are like, I got to trust. I got to learn to trust. Yep, you do. You got to learn to trust. Okay. We all do. We all need to learn to trust. Okay. Guys, what the heck's going to happen from here? Oh my gosh, we're going to start practicing these setups. And I want you guys to start sharing your results in the chat. Like, oh my gosh, I just took the setup from the AiO. Wow, I just got a 6R off that, 8R, right? Very possible, very exciting. Track your risk to reward and let's freaking go blow this thing up, right? Like I look at trading as the last 5 years, trading has become so mainstream and so popular. And people are working hard, like developing tools, developing systems, live calls, and everything happening. The industry is ready for like a level up worldwide, right? Like I know we're not the only show in town. There's a million shows. We're very small. No one even knows about us yet, right? But we're gonna emerge from the average Joes. We're gonna emerge as like an incredibly sophisticated system that really changed people's lives because of how we automated the analysis on the charts. And we're gonna have competitors out there. We're all gonna have fun. We're all gonna rise to the top. The trading industry is ready for something like this. It's January. The year just started. Let's go out there and pass our prop firms. Let's use the setups and protect our equity. Let's actually be disciplined. Let's actually make a professional career out of trading. It's possible. Okay. So, guys, thank you so much for being on here live. I hope you enjoyed the call. We'll definitely share the recording. This is definitely a call you'd want to watch more than once to really understand what the heck I'm training on and how powerful the tools are. I'm available for you guys in the Discord. Let's continue to discuss and share our examples. Blessings to you guys. Have a rocking rest of the week. We will be back on tomorrow, Wednesday at 7 p.m. Eastern. Okay, we do a daytime call and then we do an evening call. We're trying to accommodate people from around the world, and we'll keep our schedule updated based on the needs of our community. All right, blessings to all you guys. Thank you so much.